Hey traders, John Howell here from tradinginvestingforyou.com. Of course, anything I do say in this video is general advice only. Okay, this is just a general overview of what's happening in the market. That's exactly what we're going to be covering in this video. We're going to be looking at the S&P 500 and also the Dow Jones. This is just going to be a quick update to show you what's happening right now in the market. If you want to know more information about what we do and so on and so forth, head over to tradinginvestingforyou.com and make sure you click that subscribe button because we do put these videos out on a regular basis. Alright. So for the last couple of days, we've been talking about the S&P 500 or the Standard and Poor's the Standard and Poor's 500, and also been looking at the Dow Jones as well too. But have you noticed as well too that especially on the S&P 500, we're actually looking very, very weak, and I'm expecting more downside to come. If you see over here, you see over how the market resists through here, resistance, 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 and then resistance through here. You can see how the markets continue to bounce off these levels. Bounce, 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 bounce. And now we're almost at this level here. Look at it just going sideways. Struggling to break above the highs. And now what we're noticing as well too is this. As the market is going sideways, sideways through here. As the market's going sideways, we're getting the stochastics running up through here. As you can see, it's really getting up through here now. So as the market's going sideways, stochastics getting into the overbought sign. Now that is actually a very, very bearish sign for the market to be moving down. Okay, so I did put a video out yesterday and I talked about the pattern that this market was forming. And as you can see, this pattern through here, you can see what's happening right now already on a 60-minute chart. Okay, we can see we're getting this sort of movement here on the 60-minute chart, right? So I believe this is likely to see a lot more downside to come. We're just going sideways here, not doing much. Again, this is for the short term as well. Back to the daily chart now. We can really see this market just going sideways and really struggling to move up through there. Now, one thing I do say which is likely to trigger this is the Dow Jones Industrial Average. Okay, the Dow Jones. Now with the Dow Jones, you can see here, this is what I call my stop and reverse pattern. The market runs up, hits a resistance, breaks off. Runs up, hits resistance, breaks off. Runs up, blasts above that resistance level, and now just goes sideways for a couple of days. If this Dow Jones starts to break below this level through here, that level through there, this level right through here, if the Dow Jones starts to break below that level, then the S&P 500 is also going to get dragged down, and we're likely to see some movement to the downside. So with the same with the Dow Jones Industrial Average. Dow Jones Industrial Average, what we're seeing is we're seeing the market struggling, right? It did break above, and on the Dow Jones, we actually have the next high up here where the market should be running to, okay? But because it's not doing that, it's actually showing a lot more weakness based on that. So as we can see, this market's going sideways, sideways, sideways. It's not pushing through. Now the reason why I call this is what I call a stop and reverse pattern, because it breaks above the resistance. All here is what we call the stops. So they hit the stops for people that are getting in here. And also what happens is this. If you think about the market as it moves, right? If the market breaks past a support level or resistance level, the market's likely to continue, right? So look at this here. As the market finds support, what happens? The market breaks and it runs down hard. Then it finds another support. What happens? Runs down hard and runs down through here. Market runs up, finds the overall resistance level through there. Okay, what happens? It breaks and it runs hard. Okay, so, and if you can see over here, we have, go back over here now. We have the resistance here. Market ran up, hit resistance, broke up. What happened when it breaks? It runs hard. So, as you know, when a support or resistance level is broken, we generally see a market move strong. Okay? We generally see that market move strong. But because it hasn't moved strong, it's showing an indication of weakness. Now, what we need to confirm that, because sometimes you will see like this here, market breaks up, goes sideways, and then continues up. As you can see here, right? But what we're seeing here is this market going sideways. For it to confirm we're showing weakness, then what we need to see is this market open and then come back down here. If it doesn't, if this market starts opening, starts running up through here, then we're likely to shoot straight up to this level through here and take the S&P to the high side as well too. But this is actually setting up for a weakness move, okay? And the reason why, once again, is because whenever you get the breaks of support all the breaks of resistance, we generally have the nice run, the nice run. We don't, whenever the market breaks above a major resistance level and it just goes sideways, it's showing that the buys are quite weak, and it just pushed it up, hitting stops, and now we're likely to see some move to the downside. So that's what I see what's happening on the Dow Jones Industrial Average and also the S&P 500. Dow Jones is hitting there. If it starts to break down, we're looking at the S&P 500 as well too. We're likely to see a pull down as well too, to at least this sort of resistance over here, which is sort of the 1400 level, and possibly even down further. So big analysts such as Harry Dent and a lot of big analysts out there are calling this year to be the down year. I'm not sure if that's true. Let's just keep reading the charts. Let's keep focusing on the price action is telling us, and we'll see it from there. But there's a lot of big analysts saying that January, February is likely to be the topping point for the actual market. So are they right? I don't know what Harry Dent is saying about this. Harry Dent is saying that the topping is in. Harry Dent's been saying the top's in for quite some time now. So I wouldn't really. I'd listen to Harry Dent what he says because he's got some valid point. But I'd listen to what he says and combine that with chart analysis, price action reading, and that's exactly what we teach down at tradinginvesting4u.com. So make sure you do that. Head down right now to tradinginvesting4u.com and check out our blog, check out our information over there, where you can actually every single day we're actually releasing articles about the news announcements and so on and so forth. So head down there. And once again, what we're about here is we're about teaching you how to read price action. That's exactly what we do at tradinginvesting4u.com. We teach you how to read price action so you can take a fundamentalist or an economist such as Harry Dent, and what we can do is you combine that with what we teach you is charting analysis, and with that you have an actual quite powerful view from there. So once again, head down to tradinginvesting4u.com. You can follow us on our Facebook, which is facebook.com/share trading mastery. We're posting articles and everything there every day. Every day we're posting at least 3 or 4 articles about the major news announcements coming out that day. So if you want to keep on top, head down to Facebook, and also we also post to our Twitter, which is twitter.com/John Trader. This is John Howell here. I'm out of here. Thanks for the video, and I'll see you in the next one. No matter what happens, say these yourselves every morning, every afternoon, evening, and that is success can be yours if you go claim it. So step up, take massive action, and face your fears today.